Okay, hello. My name is Adwayo. We started in 2016 and it's been a very challenging but exciting and certainly very, very full of lessons kind of experience. When we started, all we knew was that we wanted to fill a gap that we had seen, right? The origin of it was just in December of 2015, someone broke their wooden box and we decided, I think we can digitize this. And that was it. That was all we knew. But like moving into it, really starting it and seeing the modalities of running a company like this has been a giant learning curve, so to speak. Like AutoSave, we have Quick Save, we have Safe Lock. AutoSave is periodic savings. You can save daily, weekly, or monthly. The Quick Save is for people who don't have like regular income or who would like to be more in control of their savings. So you can go to your Quick Save, drop 20K today, 30K next week, 60K upper week. So it's for bulk deposits, all right? And we have the Safe Lock, which essentially functions like your typical fixed deposit. But we offer interest up to 10.95% every year. And then now we're launching a product called Smarter Get, which I spoke about earlier, which is more towards the group savings market. And then in future, we are going to have investment products, insurance products, loan products, but in partnership with external institutions. We are a very early stage company, right? People have trusted us with their money. 55,000 people have trusted us with their money. We don't take that lightly, right? And we don't want like any challenges whatsoever moving forward. A float is required, right? And yes, we do have float from the people, but wise people and financial experts have told us that growing with customer funds is not advisable, especially because of the instability of the economy. It happens that there's something called a bank run where there's a scare and everybody moves to pull their funds out. In that case, if we don't have backup funds of our own which we've raised, then the company will be in trouble. So it's a combination of being accountable to our users who have trusted us, because like when we launched, we're a relatively unknown company. They didn't have to do that, but they've trusted us. So we want to be accountable to them. We want to retain our credibility, and then we want to have foresight. Like the economy is unstable, so it's a little unpredictable, so we don't want to be caught unawares or by surprise. Right now we are, focused on the banks. Why? Because Nigeria has an alternative between wanting to implement the cashless policy. Cashless policies are more favorable to banked people, so we envisage that more people will become banked. But even with that, we will still focus on the unbanked eventually, because there is a lot of money moving in the grassroots of Nigeria, and we would definitely like to take advantage of that opportunity to also help those people become financially free. So we will probably have to establish agent networks, which allows people who don't have bank accounts to go and pay cash, and then it is recorded in their piggy bank accounts. So that's one of our future plans, to really dig down into the grassroots and see what their problem is. Because one of the things that we realize is that we have to figure out what the problem is and how we can then take steps to tweak the platform to fit their own requirements. We have to figure out exactly how a platform like PiggyBank will look to someone without a smartphone. Is it going to be SMS-based, USSD-based? Those are the kind of studies and research and plans that we need to put in place before we then say we are jumping into the unbanked market. It's not something we take lightly. So we're going to have to put extensive, robust plans in place and then go to the unbanked. But we definitely have plans to go to the unbanked market. So for the first 2 years, we bootstrapped, so we're essentially spending our own money on the company. And like I said, we were growing steadily using peer-to-peer recommendation. But to achieve scale, we need more money so that we can aggressively acquire users because, of course, competition will spring up. So we started fundraising and we were able to raise $1.1 million from it was a majority local Nigerian investors, which is really great, and we're super privileged to have been able to achieve that. Leading up to it, it was really a very quick experience for us. The investors who showed interest in us actually believed not just in the team but in the product. So it made the conversation all the more easier, and we're able to conclude, sign, and jump into the growth process very easily. We are going to use the funds for license acquisition. We actually already acquired the microfinance license. We're using it for product development. So along with the fundraising announcement, we also announced a new product called Smart Target. Smart Target is a peer-to-peer financial services platform which leverages the power of traditional group savings. So that's one of the new products that we will be spending money on. So product development, and then, like I said earlier, aggressive marketing to grow very, very fast. When we started, our user zero was the person who sold my co-founder his wooden box. So after that, we relied solely on peer-to-peer recommendation. So the one thing that we realized is that for this kind of product, throwing money at the marketing and erecting and just putting money behind the marketing isn't as convincing as people using it, having great experiences, and then going out to tell other people, hey, look, here's what this product has helped me do. So since 2016, up until now, we've relied on a combination of peer-to-peer recommendation and referrals and very, very minimal grassroots social media campaigns. So it's mostly people tell their story on PiggyBank, other people is PiggyBank good? Yes, try it, they helped me. And then we have really active social media accounts on Instagram and Twitter, Facebook. For the record, I'd like to say no. We are here to work with every existing institution possible. We don't see ourselves as here to replace the banks. We're here to enable the banks. We're here to move the institution of banking forward, right? So the thing about it is the market that we serve, the younger market, is different. They have different needs, they have different habits, right? And they have different ways of processing information, which is some of the things that we've discovered in our startup journey. This is our third startup, and we have one which we've worked with this demographic for a long time, right? So we understand them, and our mission and our aim and our vision is to capture the millennial market, right? But doing that and helping the millennials understand finances, we cannot do it all by ourselves. So we will partner with banks, we'll partner with investment houses, we'll partner with insurance companies, to bring their services and plug them into PiggyBank. So the overarching mission is to help people make their finances more transparent and more clear, right? So what we want to become is a financial warehouse, not replace existing institutions. We will work with existing institutions. And to the expertise aspect, yes, we are techies. I have a background in computer engineering. My co-founders have computer science and mechanical engineering respectively. So acquiring a license comes with requirements that you hire for the expertise that you're lacking. So we are beefing up our finance team. I would hope Piggy Bank will be a legacy financial house, the go-to place for millennials and their finances, right? Do they want to save? Piggy Bank. Do they want to invest? Piggy Bank. Do they want to have insurance? Piggy Bank. Do they need loans? Piggy Bank. So that's where we're going. Hi, my name is Odwanya Owini. I'm co-founder, COO, piggybank.ng. Keep watching Guardian TV.